Wow, what an absolutely wild day on Wall Street. We're calling this one the Manic Monday Reversal, because really, it was a session that told two completely different stories.
So the day kicked off with just pure panic. Right from the opening bell, sellers were completely in charge, shoving the major indexes deep into the red. You could almost feel the floor about to give out.
At its absolute worst, the S&P 500 was down a full 1.5%. So what was driving all this fear? It all came down to one thing: oil. U.S. crude prices just went on an absolute tear, spiking past that critical 119 a barrel level on news of escalating conflict fears. But then, just when it looked like a total washout, the entire script just flipped. In the final hour of trading, the market staged one of the most incredible turnarounds we have seen all year. Buyers came roaring back, wiping out all of the day's losses and then some.
By the time the closing bell rang, the S&P 500 was actually up nearly a full percentage point. And the whole thing was sparked by comments from President Trump suggesting the conflict might be de-escalating. That sent oil prices whipping all the way back down. Just a truly manic day. Okay, so let's get into our first deep dive. Amidst all of that chaos, the industrial giant GE Aerospace, well, they made a massive bet on themselves. And just look at that move, up 1.8%. Now, GE didn't just tag along for that late-day rally. It showed some incredible strength, continuing its amazing 67% run over the past year. This tells you it wasn't just riding the market's wave. There was something much deeper going on here. And here is the driver. GE announced a massive $1 billion investment into its U.S. manufacturing. So here's the crucial point, right? They have this record backlog of engine orders thanks to the post-pandemic travel boom. But you know what? Wall Street doesn't care about a backlog unless you can actually execute. This investment is a huge signal that they are dead serious about turning those paper orders into real cash.
Now for a completely different story. Let's look at JetBlue, which found itself on the absolute wrong side of today's oil shock. It's really a perfect example of a company becoming a victim of these big external market forces.
The move here was just brutal, down over 5%. And what's really telling is that while the rest of the market was roaring back to life in the afternoon, JetBlue was just left behind. It totally missed that bounce. That tells you the damage from the morning scare was permanent for this stock.
And the driver? Well, it couldn't be clearer. That insane volatility in crude oil we saw. For an airline, fuel is one of the biggest and most unpredictable costs, and today was a perfect masterclass in why that matters so much.
You have to understand, when crude oil even briefly touches a level like 119 a barrel, it absolutely terrifies investors in the travel space. It doesn't even really matter if it pulls back later. That one spike is a painful reminder of how vulnerable these companies are to things that are completely out of their control. And that's because high jet fuel costs, if they stick around, can just completely torch an airline's profit margins. They can take what should be a fantastic travel season and turn it into a total financial disaster. And investors know it. All right, for our final deep dive, let's talk about a stock that seemed to be living in its own little world today. Costco, a true symbol of just unshakable consumer resilience, even with all this macro chaos swirling around. The move here wasn't some explosive rocket ship, but that's exactly the point. It showed this steady, relentless strength, grinding higher by 1.6%, even when the rest of the market was in a full-blown panic. This is what we call classic relative strength, and it is a very, very powerful signal.
So, what was the driver? A flawless earnings report, and specifically a massive 14% surge in their high-margin membership fee revenue. That is the moat everyone talks about. It's that predictable, recurring revenue that investors absolutely love, especially when the world feels this uncertain.
Okay, so we've seen the whole story: the big market reversal, the industrial bet, the oil shock victim, and the resilient consumer. Now, let's put it all together in your water cooler briefing.
This is exactly what you're going to say tomorrow morning to sound like the sharpest person in the room. Let's do this.
When someone brings up General Electric, here's your take. GE's $1 billion manufacturing investment is a huge signal. Look, it's great to have a record backlog, but the market wants to see execution. Funding that capacity expansion proves they are serious about converting those orders into revenue, which validates a heavier weighting in aerospace right now.
On JetBlue, you'll say this:
That 5% drop in JetBlue shows exactly how fragile airline margins are. Even with oil pulling back, the fact that crude can touch 119 on a single piece of news is a textbook example of headline risk, where one bad story can just wipe out a company's solid fundamentals.
And finally, on Costco, here's the sharpest analysis. Costco grinding higher on a 14% jump in membership fees is the ultimate defensive play. When the macro picture gets this volatile, you want companies that generate predictable, high-margin subscription revenue. They don't just sell bulk groceries, they sell certainty to their shareholders.
Costco proved today that its membership model is basically bulletproof, jumping on a 14% fee surge. Do you think Costco is the safest stop in the market right now? Or is it getting too expensive to buy here? Comment below.
And subscribe to Market Fluency for your daily edge.
We'll see you next time.